Good morning, everyone. Welcome to the Euro Trade. How's everyone doing this fine Wednesday? Let's have a look at what the markets have in store for us. So I'm looking at maybe natural gas today, staying away from some metals. But there is some rotation that I'm seeing from silver into gold. However, gold today it's kind of entered a bit of a chop zone between 48.50 and 4900. So until it kind of breaks either side of that, it's a little bit difficult to find a decent trade out of it. Copper is in a similar situation. So it's in this big chop zone between 575 and 590. So this whole, I mean, we might be able to find some scalps there, but it literally has a number of things going on from 575 to 590. So that means that the moves inside these chop zones are not going to be very smooth. And that is not what we want, because that is where you get torturous price action that takes forever to give you the 70 ticks. And these are some old levels from the other day. I still need to do the silver analysis just to see whether that's maybe looking a bit better. But for now, the metals are in a bit of a precarious situation. I mean, it's not that odd after all of the movement we've seen recently. At some point, we do have to chill. If anything, at least to like try and find some more momentum for further upside. But it's not always all peachy, right? Right, let me try and grab some data here. I had to get the dogs out, ready for doggy school, so I still have 4 of them here, but the other 4 have gone out, and on Wednesdays they get picked up in the morning. So I'm running a little bit behind. Usually I do all of this way before the stream. What's going on here? Okay. So just give me a minute. I know, it's riveting TV, watching Dee nerd out. This is what I do away from the streams, just do data crunching. Okay. Yeah, I saw natural gas, Kareem. Yeah, I was on a portion of that yesterday, but right now it's a little bit too high up. So we're gonna do data crunching for nat gas as well, because that is getting on my radar now because of how it's starting to move. And this could be finally that seasonal move that we've all been talking about, or at least Coach Hoop and me have been talking about forever, because this is pretty looking pretty parabolic. So we'll have a look at some of the, maybe grab an entire options chain there and see what we have in regards to the extended prices, which we can go all the way up to $9. So that's pretty cool. But yeah, I think this is a gamma squeeze now. There's usually the reversal either during the overlap between London and NYMEX, or between sort of the initial balance and the post-NY cut period, which is 9 a.m. Central, 3 p.m. over in the GMT, if you're in this part of the world. So we're going to be grabbing that as well. My cursor is behaving a little bit weird today. I don't know why. But let me find silver. It's kind of lagging a bit. Doesn't normally happen. Yeah, so silver hasn't really changed all that much. It is also in a chop zone. So that chop zone is up in 96. So it's between 94 and 96. So yeah, that's going to be tug of war in and around that area. So maybe we can do pinging it up and down in between. Like we have 97, that is actually a pretty moderate resistance area. But yeah, I don't think the metals are going to be my focus for today. Let me just grab another set here on natural gas, and then we can look at the energies. The energies. So, no, that's not what I'm looking for. This is what I'm looking for. So yeah, what I'm trying to do now is I am looking for prices that are above what we currently have on nat gas, because everything's gone a little bit crazy. So I'm just trying to go even further. If I look at the end of day levels, I don't think we're going to have enough. It's funny how it hasn't rolled yet. Let me just check something else, because we're at that time of the month when we usually roll, but it hasn't rolled yet. There is rollover happening though, because yesterday NGG was still in the hundreds, whereas now they're kind of trying to split it between March and February. So that's slow roll. The rolling is slowly. So yeah, let's just grab these levels here, and then I can start to do the analysis on Topstep X as well. Once we grab those. Did I grab the entire chain there? I did. Right, let's see. Right, no chop zone on natural gas. But yeah, so it all seems to be an expected move, because the implied volatility has fallen a little bit. And I mean, it's still, for some reason, only focusing on. Just wonder whether everything is really thin above 450. Because, like, I can see 5 evens as a potential area, but the rest of it is just. I need to look at the actual options chain here. So. Yeah, okay, that's interesting. So, let's do this. I mean, yeah, there's not that much. This is kind of a bit strange actually, because there are like a few strikes peppered in between, sort of 5 and really 9, but they're very very low. It's like they're not really interested, or no one is protecting for the upside, which I suppose would make sense in a seasonal way, right? So 5 at the moment remains a target. I wouldn't be fading things from 5 evens, but there is a call wall there, right? It's not the biggest. We got 1 put at 5. So yeah, obviously the positioning is definitely more like there's put protections being bought, but that's not going to stop this thing. So the breakout that we're seeing, this is within the seasonal expectations. I actually wanted this to happen in November because that's when it usually happens, but here we are halfway through January, and only now they're like, oh yes, cold weather, let's go. So very, very bullish outlook. So, but they are hedged, you know, they're hedged for the downside. So some fear and greed happening in natural gas. So when natural gas gets like this, it gets a little nuts. And it's beautiful. It is beautiful to trade. So kind of like what happened to silver. Except natural gas has this tendency to try and run a reversal. Now we've had that actually yesterday. Compared to what we're seeing here, the reversal that looked massive yesterday was a baby compared to today's movement. So this is what I was looking at yesterday. So I said usually you get some kind of a pullback that can be a little severe, and we got it half an hour after NYMEX open. So this was NYMEX open, and then they just ran it down by about 200 ticks, but eventually reclaimed the call wall at 380, which was my orientation point. So I managed to catch it because this reversal, I wasn't in on that, but I managed to catch it here because I had to do something else, so I wasn't at home. Managed to catch this part, and then obviously they kept bouncing it between the call wall and the newly formed supply. However, overnight they just started running it up, and now these candle, like look at the sizes of the candles, they're massive. This is looking like a nothing move, even though it was a 200 tick move. So this is a proper breakout. But what I want to see is at least a test of the former mega call wall, which was at 450. And let me just write some stuff down here because I've got a tracker that I want to keep in mind. Okay. So yeah, because of the hedges that are also evident in the options chain, even though traders are paying for the upside, so premiums are pretty expensive, there's still a chance that that hedge at some point is going to drag it down to 450. So that may happen into the overlap. Are we going to find a trade now? I don't know. Maybe if we get down to 450. And then my first target would be 5 evens. And then above that, maybe we can use standard distribution 1 and 2 to see what the elevated targets, expanded targets will be. But yeah, it looks beautiful. Something just broke on one of the charts. Let me just check that I didn't grab it from the one that I usually use for Discord data. No, I did not, so that is a bit strange. Just wonder whether I'm a little bit overloaded here with various things that are open, which does happen. You just open up like a million things and you're working on everything at once. So, not the best. You know what? Let's get a brand new chart because I don't quite know what happened there. So yeah, so one of my templates here is not, it's not working for some reason. Let me just get out of this and then get back into it. Zag Emmanuel says, hey Dee, it's been over a year since I watched you. How have you been? I've been fine, yeah, you know. Isn't the bond yield parabolic run causing this gold move at least the leading factor? Yeah, I mean, they're all correlated. Coach Robert is here, right, okay, here to cause trouble. How would you, Dre, take profit? How would you handle copy trading 550k XFAs with 2.7k balance, 0 MLL? So that tells me that you took a profit before you actually got over the trading drawdown, which is something I tell people not to do. Because, you know, I don't even want to consider payouts unless I'm like at the bare minimum 6k, but really 8 to 12k on 150k. So once you're over the trail, then you're like, okay, you're in safer territory. Not that it's ever safe, but you would be in safer territory, right? So now you've put your back against the wall. So now what you've done is you have effectively, if you just look at it per one account, you only have 2.7k left. That puts you into the micro territory, and now it's as if you've got a 50k account that where you've just gone over the trailing the trading drawdown. So you need to behave as if that's what you've got. So now it's no longer a 150k account, it's now a 50k account with 2.7k balance left. So that's how I would run it. I would stay away from silver, which is not really a true micro, in my opinion. They call it a micro, but it's only a fifth of the bigger contract, and it's very expensive. So you can't trade that. Go into products that you can manage risk better. So it would be MGC, MHG, MNQ, MES. I don't know what you trade, right? But MNG, there's a very good micro on the natural gas as well, which is just $1 per tick. But yeah, that's how you had to look at it. So now it's no longer this 150k XFA. And why? Is because you mismanaged the bankroll. Very simply, right? This is where bankroll and when you take payouts, how you behave after a payout. I see many people who are doing these payouts literally when they get the 150 for 5 days. And it's like, just because you can take a payout doesn't mean you should. Because the bankroll side of it is extremely important for longevity in the game. So whilst the payouts are still counted towards any kind of milestones in the live account, you won't have the balance in the account post payout. So you just can't do that. Therefore, many people take a payout and then they continue to trade with the same size, even though they massively reduced the balance that they were working with. So look at your existing balance as your working capital. How much working capital do you need in order to keep generating profits and managing risk, obviously, without jeopardizing the entire account? So that's the question you need to answer. And if you take a payout before you get over the trading drawdown, to me that's a no. To me that's just completely defeating the point of getting 150k XFAs in the beginning, in the first place. Why? Because now you don't have the 4.5k, right? You have 2.7 because you took the payout early. Just some things to think about. Anyone else trade ICT? No, we focus on more dealer positioning here. Profile, distribution curves, looking at the auction, and volume, which ICT says does not matter, and I heavily disagree with that. But, if you trade it, go for it, man. It just doesn't really float my boat. Zwain says, up 1,300 today, trading copper. Well done. Well done. Never traded NG. Is it like a historical daily candle? No, I wouldn't call it a historical daily candle because we've had these sorts of runs in the past many, many times, because this is what happens seasonally. And this is by far, I don't know whether this is going to go back enough because it's a different contract, but it's not out of the question for nat gas to have, whoops, oh no, I did the same thing that I did. Is Coach Robert still around? Because I absolutely hate when I did this. So I effectively dragged the price chart somehow into the bottom window, and whenever I do that, I never know how to get it up. Like back, that sounded wrong. I never know how to get the chart out from the bottom window. So, do I smoke? I do vaping. But I'm trying to move back to the patches actually, because I stopped smoking in like 2008, and then because of my illness there was this thing with the ACE2 thingy. Never mind, I'm not going to go into the science of why nicotine prevents certain things attaching to yourselves. So I started it because of that. And I want to go back to the patches because the vapes are all very well, but just don't want anything in my lungs, you know. Click the A at the bottom of the price. Yeah, that's not doing it. It's still stuck. All right, okay. There's another thing called the restore pain. Pain, yeah. So, okay, I think we're there. Is that it? Oh, joy. Yeah, so nat gas does have these enormous moves. In fact, I mean, this is a very big one, but there have been bigger ones, and we've had tariffs that were pretty fun. And if we go back to sort of March period, we've had some very, very big moves, right? And this is a different contract. Obviously, we would have to go to the contract that we were trading at the time, but we've had days of like 1,000 ticks easily. And how much is this? This is on par with that. Yeah, so it's about just over 1,000 ticks here. And now what we can do is not be high on hopium that this is going to keep running, but look at 5. So why did the chart now move to the left? What have I done? I've broken it. I've broken it. So why did this now turn? What have I done? No, I think this is still in the bottom window, you see, because this is my ATR. So I haven't actually changed it. Yeah, because this is the actual chart. Can I reset that? No. Your price scale is on the left, right click on it and move it to the right. So the undo arrow next to the add chart link. Okay. Okay, hopefully we'll get there. Did I do a lot of clicking? Doesn't seem to be. There we go. Hey! Wow, I do a lot of clicking, don't I? Yay, we got there. Okay. Oh man, it's way too early. I hate anything graphics going wrong, and I'm just like, make it work. So yeah, it's a big candle, but I wouldn't be expecting another 1,000 ticks because we are at the extremes of, you know, what this particular product can do. But not unheard of for natural gas to run for 1,000 ticks either side. So 5 evens would be my absolute top for the day. And then we might look at trading from 450 on a pullback, because that is also a former mega core wall that was now broken. So we are in a gamma squeeze. And now we need to see some other areas that can yeah, thanks Robert. Yes. Yay. But yeah, next time that I do that, I will just remember the undo, this one, the undo next to the chart link. Thank God for Coach Robert this morning, eh? I had that happen to me like a couple of times where I just dragged it. I don't even know why that's an option. Like, why would you ever want to drag your main chart into a sub window? Bizarre. Okay, missed out on not taking a buy in gold in the open today. Fear is still somewhat in control. See, I would disagree with that. I would say that we are in a big chop zone. So one thing that I have like I can't possibly put all these in, so I'm just going to do this. So I have this like tracker where I kind of crunch the options data. So that's, you know, another one of the things that we do on the side. And it's in a chop zone. It's in a chop zone. And, you know, does this look like it's still running? No. As soon as it ran through 4800s, it was going to slow down, right? Now, we also have the gamma flip at 4865. So that is a little bit tricky because now they're fighting, right? Now they're like, are we positive gamma? Are we negative gamma? Are we positive gamma? Nobody knows. So you have to wait until that resolution on gold in order to have smoother opportunities. So we either go higher or we stay contained sort of between, you know, 4800 and this gamma wall that we have, gamma flip at 4865. We have 4900s that is of interest because there's a lot of open interest, but the implied volatility at that strike is a little bit low. All right, let me see if I can get this natural gas back on the map. Man, I'm struggling with charts today. What's going on? This is a gremlin, tech gremlin Wednesdays. Right, you know what? I'm just gonna do this. Let's have a look at what the profile is doing whilst all of this was running. Now notice since London started, we are a little bit muted. But let's have a look at, suppose I will anchor it from the moment where we started running. So where is that value? It's actually building, unsurprisingly, is building value here at these prices. So 471. That's where the point of control is as well. Now I could anchor it further, maybe to catch the breakout. But I mean, really, this was the break, right? Because they stopped around, just stopped sub 4 evens, and then started running. One thing that I've noticed is that on natural gas recently, the dealers like to hedge as they approach the call wall, so a lot of the times they won't even touch it, and then you see that reversal. So now we have VWAP at literally at this former mega call wall, which is now support, right? So I want to see whether we can get the ADRs are gone. So ADRs are in an outlier day, so that's not going to be very useful, and therefore we have to look to the option strikes and some of these extended targets for our levels. But I would be working within the range, so I will be looking for 50 to be tested first, and then maybe a bounce from there. Now the stops are going to be interesting. We may need to go to micros because I'm guessing, just kind of, you know, guessing that the ATR is going to be massive. So let's just have a look at what's going on here. So on a 30-minute time frame, which is what I like to look at, we have 117 average. That's a lot. Usually natural gas is like 25 to 30 ticks, and even that is like quite generous. But on this kind of ATR, I would probably go down to micros. Yeah, so expanded stops have to be a thing in expanded volatility as well. So if I take the 117 and I want to risk no more than about, let's say, 300. Yeah, that would put me at about 2 to 3 micros. So micros we go. So instead of going, yes, let's trade the full contract, and then you enter a full contract with the old stop, and then it just smacks you in the face, and you're like, what? Where is it? It's like you got stopped out in 3.5 seconds. Why? Because 35 ticks is not going to get you anywhere. It's not going to allow the trade to breathe. So this is why we have to position ourselves in a different way. Now I do have my brackets set just for the times when volatility goes nuts. And also for the times when I want to scalp crude oil on 15 ticks for 35 ticks towards the end of the day. So this is where brackets are pretty awesome. I do wish that the brackets would actually check the open orders and then remove the resting orders when you remove them. Robert. I know that you know, but I'm just saying it's a bit odd. So I will put 120 ticks for a stop. And I'm going to wait for 4.5 to arrive, because anything in between, I'm not really interested. And Astrid has decided to have a little scratch. You get an itch, do you? Just hear him. And I'm like, what's that? Oh, yeah, it's a dog scratching itself in the background. Yeah, so until we get to 450, not much for me to do. We can track the London profile. That's one thing we can do. There we go. And as you can see right now, it's very muted, and we're in the middle of the value. So until that changes, we've got nothing else to do. Even the volume profile is telling you the same thing. So all of this is now weak structure. And some people say, well, the weak structure needs to be repaired. Yes and no. It depends what's causing the weak structure, right? So this is a very quick move that went parabolic. But now, I wouldn't be looking for a full retracement down. I definitely would not. Why? Because this was caused probably by the increased demand of natural gas for the cold weather that presumably, just going to guess, is happening now. But feel free to... Yeah, Robert is with me on the OCO functions. Yeah, hopefully that's going to be sorted out, because it's, you know, you would think that it's a pretty important feature, but hey, what do I know? I'm obviously in a criticism mood this morning. Would you take a mean reversion from the cold wall back to POC? On natural gas, hell no. This is the kind of day where even if the ping back from 5 evens happens, it's probably going to be a bit muted, because something else is driving this. But even though I'm thinking, yeah, 5 evens is probably the top, I have traded natural gas long enough to know that you just don't fade natty when you're seeing this kind of stuff happening. Because you also have to see where this whole move is coming from. And actually, let's go to a monthly chart, shall we? Just to give it. So where are we in a chart location on Mahusive time frame? This is something that can give you context. And this is where staying zoomed in on like a 15-second chart is not a very good thing, even if you're intraday, right? So when we look at the monthly chart, let's imagine this is a 5-minute chart. Where are you in the trade location? At the very bottom, right? So what is the expected outcome? That somehow you're going to get another massive move down, or that this is the beginning of a breakout that can get very, very ugly very, very quickly. And yes, it's a monthly chart, but markets are fractal, so they will behave in a very similar way. when we look at the chart location of the monthly, this is just starting its move from the former demand, support, however you want to call it. And in that regard, this area here between 5 and 6.5 roughly, it's very low in the overall distribution curve. So what is your distribution curve here? It's this whole move, right? So where's the distribution curve? Probably somewhere in the middle. Where is the fair value on this entire move? So at the very least, you can expect that this is going to run to the middle in the next 2 or 3 months, right? At least until the spring. And then, maybe it will stop. But what you will find with nat gas, that once it starts moving like this, it's like it takes no prisoners. It's relentless. So that's why I would not be messing around with 5 evens as a mean reversion down to whatever mean you might be using, whether it's point of control, whether it's VWAP, whether it's whatever. I would take the longs from the mean, because now we're potentially in an uptrend here. And this is where the context around what you're trying to do with the level will switch depending on whatever is happening. So some people are like, well, I go long from VWAP. Okay, but what if we're now changing the entire sentiment? You open below value of the previous day. Will you still be going longs from VWAP? Because I know I wouldn't. Or if we're in a range-bound day and VWAP is dead in the middle and it's fully flat, well, it's going to run through it, right? Because it's now not really a good, it's not a good reference. But what do I know? Again, I've only done this once or twice. So yeah, just be mindful of these large time frame contextual bits and pieces where you're coming away from a massive monthly support. So now you have all of this as a potential profit margin. How does that fit into intraday? Well, maybe you can scalp a few ticks from 5 evens, but I'm not going to be looking for a mean reversion from 5 evens. Even if it happens, I really couldn't care less, because it doesn't match the context of what I'm seeing on these massive time frames. Does that make sense? However, what makes sense is that if we manage to get down to the former big area that got broken, and I can also find some other confluences there, which would be, Globex VWAP. Maybe, just maybe, once NYMEX opens, we're going to have another reference for the ASR, average session ranges, which we don't have right now, because this is London. But yeah, so there's always a way to find a trade. However, shorting when something is going parabolic, not the best idea. So pullbacks and then further longs will be the play on Natty. Yeah, so the dark one is saying Northwest Pennsylvania here. Yes, it's cold. Very cold. Yes, and this is why we have this. Whenever I'm talking about natural gas, I'm not asking about the weather because I'm trying to chit-chat, right? I'm asking because, it is a product that has a huge component of physical supply and demand. So when the weather is cold, or for that matter, when the weather is very hot as well, because, natural gas is used by air conditioning units too. So you can have this interplay of cold weather, increased demand for natural gas. Hot weather, increased demand for natural gas. So, and then in between, it's a little bit muted and a bit dead. So you can see how, if we look at the daily chart, nat gas was super boring. Super boring. Like tiny little candles, barely does like $1 a day. And it's like, why? Because nothing was happening. The weather wasn't cold. We had a little bit of a November run, and I thought that was it. I thought that, I expected actually this to happen, but it just never happened. And then we got to, December, and suddenly it opened with this massive gap down, and they just ran it over. And I saw it in the options, I saw that there was a lot of puts, And I'm like, why is there, what? And then I did a little bit more digging, and it turned out that they had more than enough storage for that time period. Now, I didn't look at the inventories. We're actually going to get natural gas inventories tomorrow, so it will be very interesting to see what that number is. So if we come up with a draw of minus whatever, that means that the storage is not where they want it to be, and that's in the long run going to increase. It doesn't mean immediate, because there's always like the algo battle that happens when the inventories are out, or inventories, as I say sometimes. But then Hogue started making fun of me for saying inventories, and then now I say inventories. But yeah, it will be very interesting, and then you may want to catch it. So that would be the time, for example, for me to maybe run a long option of some sort, but also maybe to do an intraday trade the next day.Maybe on Friday we can continue to run past 5 evens and go higher up. Now, the options above 5 evens are very thin. There's not, like, literally nothing above it. It's like tumbleweed. And that could mean a nice liquidity vacuum where nobody is protecting anything to the upside, and we go into a gamma squeeze and it just keeps running. Again, we don't want to go against that. But at the same time, nat gas does have this this interplay of London versus NYMEX, and evidently Asia versus London too. Because this happened in Asia. I don't know why it happened in Asia. That's something that I need to do a bit more research on. But usually it's not that active. In fact, nat gas used to be one of those products that didn't trade overnight. So that's a little bit of an adjustment for me. Because I'm like, well, why? And we used to have gaps every single day at the RTH. Because obviously Interbank can still trade it, but we can't. And then they would just be opening with these horrendous gaps, and it would be anyone's guess which side, down, up. This is why it's called the Widowmaker, because back in the day, if you held the position overnight and it opened against you, that would be like sometimes 12% against your position. Yeah, people didn't like it, and obviously there were some people that destroyed their lives and everything, and then thought that was reason enough to call it a day, right? But, you know, knowing that, positioning, again, very important. So even if you get smacked in the face, it's not going to be bad. Nowadays, we only have weekend gaps to contend with. And actually, when I was on group coaching last time, or the time previous to that, somebody asked me whether this gap that we're seeing here is going to get filled. And I said, because of the time of the year, if we get cold weather and that's causing the gap, I mean, it might get filled, but maybe not this year. So is that a gap filled? Yeah, I suppose. But I suppose people are asking whether there's going to be an immediate fill. And my probability said probably not. Like, yeah, it could. But if I think that the weather is the reason for this, then it's a very high chance that we're not going to get a fill. And here we are, 3 days after that. We didn't get a fill of the gap, and we're basically just going up, up, and up. So yeah, I'm not going to fight it. My shorts on nat gas are off the table for now. 450 is the level to watch for, because that was the former coal wall that we were working with. And further down, it will be 4 evens, so very far away. This is the Crude VWAP from yesterday, so we're going to delete that. And then further down, sort of around this breakout point of 4 evens, which was my area yesterday. So let me just remind myself. Yeah, so 4 evens and then 380, and then if it just, let's just play the devil's advocate. If it goes all the way down, sub 4 evens, sub 380, we're actually going to run into a chop zone at 350. But that would be like an extreme reversal. And I don't think that's very possible. I mean, again, anything can happen, right? Trump could say something, it could just run it all the way back down. But if this is caused by cold weather, then longs are the play to do. That would be the safer play. 450 is the first level. 4 evens, the next level. I know it looks super far away, but remember we have the expanded range. So this is the outlier day. Whenever they run it up, there's usually enough size and volume in the market to push it back to the opposite side. I'm not going to be trading it until we populate this dome because this looks horrendous. And it is a micro. The major contract looks a little bit better, but it still has big gaps, right? So I don't want to see that. So again, I'm probably going to either find a position closer to midday. But if I don't see anything, I'm going to wait until post NY cut, which is after 9 a.m. Central, after 3 p.m. my time, to see what we have at that point. And then I will use these levels, either one of those. Let's put it at 4 evens as well, as big anchors from the options chain that can help us find our way. So you will notice that I don't use any and every option level. It's like any GEX level that comes along. You might use the smaller GEX levels as they're coming up as orientation points. But for the major anchors where I actually want to be in on, I use the moderate mega call walls and basically strong areas where I'm expecting some hedging activity to be done. But yeah, this is bizarrely a positive gamma environment. It's a gamma squeeze for sure, but it's a positive gamma, right? And that means mean reversions, however improbable you think they are, they're actually pretty highly probable. So therefore some hedging activity is expected to be happening at these former call walls that brought the squeeze, and the retest of them could happen in a couple of ways. They can just touch it and run away from it immediately to the upside. They can arrive at it, overshoot it, and then start chopping like sashimi. And then they decide they're going to go higher, so the resolution. In that case, you want to look for some absorption on the tape. So you want to look at a lot of big bubbles and big transactions happening, but no side is winning. If you see that, just stay out, because you need to wait until the big boys resolve their argument, but they're fighting. They're fighting each other, because both sides are transacting. There's a lot of volume, but nobody is dominating, right? And you need to wait it out. But if you get one of those touches and then it runs away, those are difficult to catch unless you already have a limit order. And the limit order, I'm kind of against limit orders for the intraday trading, because I find that you don't know, especially in an expanded volatility environment, you don't know how much of a smash through the level before it reclaims they will do. So you could go for 200 tick smash and then it reclaims it. Gold does that all the time. So does silver. Sometimes it wicks past the level by about 350, 400 ticks and then it reclaims it. It's like, well, yeah, it reclaimed it, but where's your risk? And it's very difficult to do anything with that. So risk first as always. But yeah, let's see what they do at the call wall. So yeah, either a absorption and then a reversal, or touch and run away. If they break it with no fight, then 4 evens is next. Am I going to short that? I don't know, because at this point I don't want to. But let's say that we get to NYMEX and the initial balance gets extended. We go past the 450 level. maybe it changes my mind. This is the power of the market-generated information, because we're working on objectivity and systematically reading what is in front of us and not trading with a bias. Trading with a bias would be, I'm only going to be long. Yes, but what if NYMEX disagrees with this huge run? I mean, what even caused this? Is it weather or is it some other development? If it's something else, like if I look at financial juice. I mean, there was some Putin and Russia news, so that could have caused it. And if that was the cause, but none of it is like super red. So yeah, I think this is mainly weather related. If it is something else, then they could fake the entire move. I've seen that happen too. So this is why you have to stay open and have scenarios and diagnose a chart in both ways. That's why I say let's play devil's advocate. What if 450 breaks? What do we have then? Well, then we have the reclaim of the mega call wall, and then maybe coupled with the TPOs and extension of the initial balance that's single-sided to the downside. Maybe that is a mean reversion at that point, but it's gonna be a late entry into the mean reversion because we first need to battle it out around the former mega call wall, which still remains a pain point. And at the moment, an area of interest. Is it a line in the sand? Yeah, sort of. But I'm not gonna be like, oh, they went through it. Let's go, because they can then ping it back, reclaim the level, and keep going higher towards the 5 evens. Just be mindful that what I'm seeing recently is that the dealers get a little bit excited to the approach of the call wall, so they start hedging ahead of it. And the same thing happened yesterday. So we had 4 evens, and look at it, missed it by a few ticks, and then they ran it all the way down. So have it as a zone, especially for the top side, because it seems that they are touching it to the downside. So this was another call wall. They touched it and then touched it again. But for some reason, as soon as we get close to the other call walls, they start playing silly games. So this one missed the call wall by 43 ticks. This one missed the call wall by 8 ticks. So maybe how you should play that is to have a zone of about 50 ticks from the call wall. Let's say 25 ticks either side, right? So 50. And then expect that this will become your overall reaction zone, let's call it that way. So that means if you're long and we get anywhere near this area, you shouldn't be doing like I'm trying not to use the word ick for a tick. Shall we say, to like your target is 5 evens or bust, right? So just have a bit of leeway. Coach Rate calls that tip the doorman, and I agree with that. Hoke calls it the 90% rule, and just take the profits if you're anywhere near that zone. If your risk reward is already over like 1.3, 1.5 R, that's already statistically viable for even smaller accuracy. So just don't try and be like ultra accurate, because in the live markets, let's face it, you can't be that accurate anyways, because there's slippage, there's like stuff that happens. You click close and then you're in a queue, especially if you're trading with more than one lot. If you're trying to get out of, let's say, 10 contracts in natural gas, I mean, you're going to wait because there's not that many on the dome and you're in a queue. So, I know that you want to get out, but here's the thing, market orders, if you click exit, they're guaranteed to get you out, but they don't guarantee the price. Limit orders will guarantee the price. So some people are like, why'd you put a limit order? Because the price is guaranteed on the limit orders, but the fill isn't. Because they have to fill you at the price or better, and if they can't give you the better, and there's no liquidity at that price, you're not going to get a fill. So it's a double-edged sword however you cut it. This is why I kind of always, like, some people are like ultra accurate. They're like, I want to get it to the tick. And I'm like, that's a pointless exercise. Because as soon as you size up, as soon as you try to do what you think is possible on the sim, and you go into the live account, that's just not possible, right? Ultra accuracy and perfection in executions and stuff, that only works in demos and sim. It doesn't work in the live. Because of the queue, because of the way the clearinghouses work, and because of the preferential treatment that hedge funds pay for, right? So they have preferential fills, but that's a paid for service that costs an arm and a leg, right? Not very affordable for your average Joe and your friend Dave down the road. Unless your friend Dave has a hedge fund. So, that can happen. RBOB shot up tonight also. Yeah, it looks like all energies are going on the run. So, yeah. So we look at crude oil. Even though crude oil, I mean, really. Let's look at crude oil. So this is why I'm not liking crude oil. All of that madness, right? Let's actually have a look at RBOB as well. So let's put crude oil left, RBOB right. Let's measure some of these moves. So crude oil, like natural gas going crazy. Not that they're that correlated, they can be. And so 83 ticks up on crude oil. RBOB nearly 200. Heating oil should be even crazier because heating oil is very thin. And I kind of think that whoever's trading heating oil, they have to be in it. It's not a very speculative product. And I think that's why I like it. Yeah, so heating oil 431. So yeah, there's some. So I think this in crude oil and correlated products it's more down to the Putin and Russia things. IEA says the world oil supply to rise by 2.5 million in 2026 versus 2.4 million barrels per day. That's a lot of barrels. See, I'm playing this video game called Satisfactory in my free time. And you're like building, it's kind of like Minecraft, but pretty, on a foreign planet. With like, weird ores and stuff that is kind of similar. So you have this thing that's like gold, but it's not gold. However you can use it as gold. And it's all about building the power supply, the power grid, that can power all of your machines, and you're effectively building a factory. And you have to match the input of whatever fuels or water and coal you might be using to power something with the output. And if that gets out of whack, the fuse breaks. So you have to go and like restart the fuse and then look at the supply, disconnect some of the machines, and from the point of, this is how I look at the markets as well. It's like, are we weighing supply and demand here, especially on the commodities? Maybe not on ES, because that doesn't really necessarily have a physical, it's not a physical tangible product, right? It's stocks. But when it comes to commodities, it fascinates me endlessly that the prices will readjust depending on whatever we need. and the outlook of how much supply do we have, how much demand. And that's why I'm a little bit weirded out by crude oil, because it is a physical commodity, but they're clearly keeping it artificially pegged. It's like, why? And I know why, because of COVID, we went negative. Nobody wants to see that again. So they're like, let's keep it between like 50 and 72. So anytime crude oil touches 50, it's like it touches a hot stove with somebody like threw a Molotov cocktail, and it is like, wow, it's 50. Let's run away. And it's an interesting number, because I don't know whether you remember when Mo was here. He was saying that in the U.S. it actually costs them $50 to stay profitable when they're extracting crude oil, whereas the Saudis they can like do it for like $5, and I think Venezuela is like $3 or something crazy cheap. However, their infrastructure is in a complete mess, so that didn't quite pan out the way they wanted it to just yet. So yeah. D, don't do NQ, man. She leaves that. Yeah, I don't do NQ. I find NQ very speculative, and I think it's one of those. It's kind of what happened to silver as well. So I've been trading silver since 2015, so about 11 years now. And yet nobody was interested in it. When I was talking about it here, when we were at 45 and 35, people were like, yeah, D, like silver, whatever. And then it started running, because I could see the demand side of it, because all the AI chips, all the EVs, electric vehicles, they all need silver to power their hardware, right? And nobody was like seeing that. And I also know that paper silver was also being pegged artificially, because I remember seeing it back in the day. It was very, very range bound on a weekly chart, very range bound for years. And then they finally removed the peg and paper silver started running to where it should be, where physical silver should be. Everybody was like, no, whatever, D. And then suddenly Twitter exploded into a silver trading thing. Like the same thing happened on NQ, which I was looking at during COVID. Nobody was really trading NQ before COVID. Everybody was like, oh, yes. And then suddenly we had a whole bunch of NQ traders. So to me, it's like monkey see, monkey do kind of moment, right? Oh, well, that person's trading it. Oh, wow, it moves a lot. Oh, wow, let me become an NQ trader. It's like that shouldn't be your defining decision of why you're trading a product because somebody else is doing it and they're doing well. And I'm of the opinion that NQ, and for that matter silver, when it's in a highly elevated state, is not for everyone. And it's because it can cause emotional dysregulation. If you don't know what you're looking at, you're going to be chasing FOMOing, you're not doing proper analysis. You're just chasing the big moves. That's a clear dopamine addictive fix. It's not analysis. It's not diagnostics. You're literally just chasing excitement. Go do a bungee jump. Don't look at NQ and silver to feel something, There's better ways to get that fix. I'm not much for jumping out of planes. I did it once, never doing it again unless the plane is on fire. Anyways, let's move on. What's the time? Coach Robert, yes. Crude oil is not a physical commodity. Crude oil is a physical commodity. Are we sitting on our ears there? I said ES is not a physical commodity. Never ceases to surprise me how I say something and then people hear one thing and they don't hear the rest of it, and then they smush the two ends like together and they're like, is that like, am I speaking Chinese? I thought my English is pretty good, but apparently not. I said ES is not a physical commodity, and crude oil is, which is why I find it weird that they're pegging it between 50 and 72. But maybe something else came out of my mouth that I didn't realize. I don't know. I am a foreign person, after all. English is not my mother language, mother tongue. Taco says twice. The second time I said no. Third time jumping out of a perfectly good plane. Yeah, I had a trader, Russian chick. Unfortunately, she was actually one of my first traders. Unfortunately, she was very young, but she ended up with stomach cancer. It was very odd. She was crazy. She was jumping. She was a skydiver. So she was going back to Moscow, and she's calling me from the lounge at the airport. And we're kind of talking markets, just getting ready for the next day. And she says, "Oh, wait, can I call you back like in a couple of hours? Because they have like skydiving here, so I'll be right back." So it's like, so you're going to travel and you're sitting in a perfectly comfortable lounge and you're thinking, you know what, I could go and jump out of a plane while I wait. Crazy woman. And then another time she said, "Oh, I have a date, you want to come out, you and James?" And I'm like, "Yeah, sure." And then I get a text from her, like literally half an hour before. She goes, "Yeah, I may have double booked, so just wanted to give you a heads up." And I said to my husband, I was like, double booked? Like, what does that mean? It turned out that she invited 2 guys on a date. And this was after her not dating anyone for like 18 months. And then suddenly she's like, "Yeah, well, the first one said he's not sure, so I invited the other one." And then it turned out that they're both coming. So crazy woman, absolutely crazy woman. But it was a very funny moment. She was a Bund trader and Aussie dollar trader. Those were her 2 markets. And yeah, when we lost her very suddenly, I was absolutely devastated. So didn't trade for like 6 months after that. Right, let's get back to Natty. So still kind of teasing towards this call wall. So nothing to do here. But those are your 2 reaction zones. If we lose those, this could be a line in the sand. So let's say so a very, very simple chart, right? Simple outlook, just using the anchors from the options chain without any additional stuff. Because it's an outlier day, so right now averages, they are not really a thing. Any averages will be broken. So one thing that you can do with the expanded targets without necessarily relying just on these levels, so let's say we run. We don't really have anything above 5, right? So we know that. Where would be your target if we do run past 5, let's say tomorrow or the next day? It would be projected as a first and second standard distribution from this level, right? So you use a big call wall and then you project standard distribution above it. That provides you with like a more of a statistical piece. I'm just changing this to the micros because we have to be in micros on a 120 tick stop. But yeah, it's creeping towards it. I don't know, maybe we get a trade. Natalie says, "Why did you lose her? What happened?" Well, she did not die jumping out of a plane. It turned out she had stomach cancer for like 2 years, and it's a very difficult thing to diagnose. She kept having like stomach issues and kept going to weird healers. I suppose that's like a Russian thing, I don't know. So I said, "Did you go to the doctors?" And she said, "Yes, but it was kind of inconclusive." And then by the end, she got like water in her stomach, fluid in the stomach, got into the hospital, they did deeper scans, and this is all because she was young. She was like 28. And then on 19th of December 2016, we lost her. So I was talking to her. She was getting treatment in Switzerland. And I sent her like something funny on WhatsApp. And for the first time, she didn't read it. So I was like, what is happening? And then I found out. So it was not entirely unexpected, but because the last voicemail that I got from her, she was very weak, and the way she was always like a heavily optimistic person, and she said she had a very thick Russian accent as well. So she said, I've been in the hospital, and last time it was a little bit critical, a little bit critical. And I was like, how can a critical be a little bit? What, like, are you okay? What's happening? But she was very proud, and she didn't want anyone to see her that way or anything, so she kind of kept everybody away. And in the end, it kind of happened super quick. Like from the diagnosis, that was July, until the end, it was December. So yeah, it was just another one of those things where the doctors are not really looking into young people's problems seriously. They're like, oh, you're young, you shouldn't have that. It's like, yeah, but it's not like it doesn't happen. I had something similar with my vaccine injury, unfortunately, where I told them that I'm having a reaction, and they were like, no, that's not a thing. And I'm like, I promise you it is a thing, and I'm not feeling well. Like, what the hell? And they're like, well, you're not in anaphylactic shock because you're still alive 48 hours after that. And then I ended up with nervous system damage, immune damage, like a whole bunch of stuff. It's like, yeah, thanks. What happened to do not harm? But, I have my own beef with the medical community, especially in the UK. They're just not, most of them are not very interested. Like when you get that one doctor that is like curious and wants to explore stuff, hang on to them. Because the rest of them are just like, well, it's not on the table. Because the way they work, a lot of them, especially GPs, that they have a table and they have the illnesses on that table that this medication can treat. So it's like, if this, then that. Anything outside of that is like, no, we can't possibly. And the researchers, the doctor researchers, they're different. They're like, I wonder why that is and whether there's some causation there. And then they research the ideas. I thought that all of the medical community is like that. But unfortunately, my experience has taught me that there's nothing further from the truth. So yeah, it was a very sad thing. It happened in 2016. So she was a beautiful woman, and it was terrible. All right, we're still slowly dripping. It has slowed down a lot. Like I wasn't watching this. I wanted to get some sleep. I didn't trade Asia. Trading Asia has made me super tired, and I wanted to, go. I went to bed like at 9:30 p.m. Still a rock star, but yeah, I had a pretty good sleep. Got the dogs ready for daycare, and then I sat down and I'm like, whoa, okay. Natty has been active. Somebody's been trading that gas. So yeah, that's definitely on my radar. I don't know where the metals will be as I'm seeing how they moved overnight. I mean, it's okay, but like I suppose copper was the smoothest out of all of them. We had a classic. Let's do a bit of a review of copper, actually, here, how it behaved. So you know how I say don't trade before half an hour into Shanghai. So wait for the Tokyo initial balance to be over. So what happened? Here is half an hour before Shanghai. And then this is your first hour of Tokyo. Nothing, right? Yeah, we go up, we go down, nothing. Half an hour before Shanghai, smash! And then it runs. Then it gives you the actual intention of where they're going to go. So I have this rule. I don't trade before my 1 a.m. That's half an hour before Shanghai Exchange opens. So if I am going to trade Asia, I have to be awake between 1 and 3 because that's when I get my setups. Time of day is a level. I still think this is in a chop zone between 590 and 580. Well, 575 really, but because it's such a big zone, if you're willing to kind of wait it out, there could be a multi-hour trade between those 2 points. But the 590 absolutely has to hold, and it has to maybe wick through this, but it has to reclaim 590 and what is now Asia high as well, because that's where Asia high was. Overnight low is this one. I don't think that that's going to be an area of interest. Like, let's say, you know how I do my Asia high takeout and Asia low takeout, like liquidity sweep and then a reversal. Because we have this major floor at 75, that was a reaction zone yesterday. And I would expect that to be reached to the downside today as well. So if we are anywhere close to either one of these extreme points, I may have a copper trade later on. Right now we're nowhere near it, but my levels for copper will be 590 and 575. Again, not financial advice, just my areas of interest. What you're going to do with them, it's up to you. I know what I want to do with them. But they're just interesting reactionary zones that are at the extreme of the chop zone. And that's looking at the options activity. Whenever you start getting a whole bunch of crowdedness in a zone, that never really leads to smooth movement and nice momentum. It's always like push, pull, then it goes down, then a lot of inside bars, and it's like, come on. And you can kind of see that here as well. So they did the smash pre-Shanghai, then they did a spiky candle, then they got stuck in a range for 2 hours, 2.5 hours, 3 hours, and then as we started getting to the final hour of Tokyo, they made a move, created a new high close to that 590, hedged against it, and now we're just stuck. So until that changes, or until we reach those extremes, there is no trade for me here. But it is possible that we get that at some point. Natural gas, just for the end of the stream, natural gas remains 450. Maybe longs, but it is a line in the sand. So it depends how the prices behave around that area. My targets would be 5 evens. I do not intend to fade that. There could be hedging. Look, there could be hedging. It's just that I don't like doing that when nat gas is moving like that, because I've been bitten too many times trying to go against the natural increase in demand on this particular product. If we break it, the next pain point is 4 evens and then 380, and then we run into smaller area where maybe some scalps could be done. If that breaks further into this week, then the chop zone starts already at 350 and carries on all the way to 320, so sort of in this area. And that's all I have for you today. So no trades, unfortunately, because we're nowhere near my levels, and when you're away from the levels, you have to exhibit discipline, and you have to find something else to do in the meantime. So what I'm going to be doing, I'm going to go and rest a little bit, then play some video games, and have more coffee, and then do group coaching today, because I think I'm on. Might be doing some trading after posting my cut at 3 p.m. And in fact, I will probably be locking out my XFAs until that time, because I didn't find a trade now. I don't want to trade in the overlap the way this is looking. And if we don't reach 450, I have no setup. At the moment, it might develop as we get into COMEX and as we kind of start creating new MGIs. Maybe we get a developing values that we can use. Maybe we get the initial balance edges being reactive. Maybe we get a failed auction somewhere. But as it stands right now, I have no setup. So therefore, how does Hogue say it? Hands on your butt and don't do anything. So just breathe, find a design distraction, and don't chop yourself up in weird areas where you shouldn't be trading anyway. There are times to scalp. On Natty today, this is not the day, right? Anyways, that's all I have for you today. So sorry for no trading, but it is what it is. Daniel says, time of day is a level. Wrote that down. Could you share more on the times? Not in a short time frame. Why? Because every product, depending on what goes on mechanistically in the day, it has different timings. And this is why we have courses, right? So to learn some of the more intricate parts of each asset class. So ES has its own. Natty gas has its own. Crude oil has its own. Copper, gold, and silver have their own. So it's too many to kind of digest here. But in the VIP coaching, that's one of the lectures that I do. And usually that lecture is like an hour and a half long. So unless we dedicate just one whole class to times of day, and I will probably lose people as well because it's not the most riveting thing. It's like, oh, well, this one moves like that because of that. So we're going to leave that for another day, maybe if I'm talking so. Like I'm already mentioning things like Shanghai. So that's a time of day where something should happen, usually a shakeout, a sweep, and then the right side of the thing, of the move. Whether you fade it or you go with the overall uptrend that the metals are in, again, matter of context. So there are subsets of how you should be looking at times of day. If you're in an outlier day like today, let's say I say post NY cut, 9 a.m. Central on Natty, that could be a time of day to look out for, but today I wouldn't necessarily be looking to fade it on the short side just because we've gone into a post initial balance on NYMEX, and sometimes Natty doesn't even start to reverse. So you can have the opposite thing where post NY cut gives you a sell-off, but then you get the Euro close, which gives you another rally, and then you will be entering with the rally, not with the sell-off, because it's against the context of the day. So there's a lot of like little sub-moving parts that are all conditional logic, if then. However, they're not as, like time of day is a level. You shouldn't be trading outside of those times for that particular product. But there's a lot of little bits and pieces that aid in the probabilities of the playbook being successful. Does that make sense? Anyways, I'm going to finish it there. So, like I said, I think I'm on group coaching today. Yesterday I got my days mixed up because this whole week is like full of, I've got like doctor's appointments and stuff. It is just all there. I thought I was on Tuesday, but I'm actually on fast markets tomorrow. And today is group coaching. So hopefully I got that right this time around. So you will see a little bit more of me on the daytime show. I will see you all in 12:15 p.m. Central. That's 6:15 p.m. GMT. Until then, let's wait for these levels to hit. Don't trade outside of them if you can help it. Sit on your hands until major areas or whatever you're looking at. If you're not using my levels, you can use yours. Just don't trade outside of them. Let that be your mantra for today. That's all I have for you today. This was the Euro Trader. I'm Market Stalker D. I will see you again for the daytime show. Take care.